Welcome to the Problem 1-3 tutorial. We are given Larson Services Inc.'s transactions for the month of August and must create a table as shown in Part 1 of the required. We will then show the effects for each August transaction in the table. Let's begin with the August 1st transaction where share capital was issued for $3,000 cash. Larson's cash is increasing, so we show an increase of $3,000 in the cash column. Where did that cash come from? It came from an increase in equity, specifically the issuance of shares. Remember that there are always at least two parts to a transaction and that those parts must balance. In this case, assets are increasing by $3,000, and on the other side of the accounting equation, equity is increasing by $3,000. The equation, assets equal liabilities plus equity, is in balance. Let's draw an imaginary line between assets and the other side of the accounting equation, liabilities and equity, to help us ensure the analysis of each transaction balances. Next, on August 1st, $10,000 cash was borrowed from the bank. Cash, an asset, increases by $10,000, and a liability, bank loan, increases by $10,000. Next, $8,000 was paid to purchase a used truck. Here, an asset, the truck account, is increasing, but another asset, cash, is decreasing. Notice that this transaction is entirely on the asset side of the accounting equation, with the net effect of 0 on assets equal liabilities plus equity. On August 3rd, a contract was signed with a customer to do a $15,000 job beginning in November. This does not cause a change in assets, liabilities, or equity because a financial transaction has not occurred. Therefore, there is no effect on the accounting equation. On August 4th, $600 was paid for a one-year truck insurance policy effective August 1. This transaction affects only the asset side of the accounting equation, with cash decreasing by $600 and another asset, prepaid expenses, increasing by $600. Prepaid expenses are assets until they are used. Examples include prepaid insurance, prepaid rent, or prepaid subscriptions. On August 5, $2,000 cash was collected for work to be performed in September. Cash has increased by $2,000 because of an increase in a liability, unearned revenue. Unearned revenue is a liability because work is owed to a customer for cash received in advance. On August 7, a client was billed $5,000 for services performed today. Accounts receivable, an asset, has increased and is the result of a revenue increasing, namely fees earned. Revenue is an equity account. As revenue increases, equity increases. On August 9, $250 cash was paid for supplies purchased and used today. Cash has decreased by $250 because supplies, an asset, were purchased and used today. When assets are used, they are expensed. Expenses are equity accounts that cause equity to decrease. On August 12, $500 of supplies were purchased on credit. Supplies, an asset, increased by $500. How were they purchased? On credit, or by increasing accounts payable, which is a liability. On August 15th, $1,000 cash was collected regarding the account receivable established on August 7th. Cash has increased by $1,000 and another asset, accounts receivable, has decreased. On August 16th, $200 cash was paid for advertising that was used during the first 2 weeks of August. Cash has decreased by $200 to pay for an expense, advertising. Expenses cause equity to decrease. On August 20th, $250 cash was paid towards the liability created on August 12th. Cash has decreased to pay down a liability, accounts payable. On August 25th, several expenses were paid. Cash decreased by a total of $2,800 because of expenses. Expenses cause equity to decrease. On August 28th, clients were called regarding outstanding balances from August 7th. This is not a financial transaction. Clients were called, but no financial exchange took place. On August 31st, a client was billed $6,000 for services performed today. An asset, accounts receivable, has increased because a revenue has been earned. The final transaction shows that $500 of the amount recorded as unearned revenue on August 5th has been earned as of today. Unearned revenue, a liability, has decreased because less is owed to the customer. Fees earned, a revenue account, has increased. Revenues cause equity to increase. To prove that the accounting equation is in balance, we calculate the balance for each account beginning with cash. Once you have totaled each of the columns, you will find that assets total $23,000 and liabilities in equity also total $23,000. The accounting equation is in balance, which must always be the case. And that concludes this tutorial. If you have comments or suggestions on how we might improve these tutorials, please contact us via email.